Yo, what's up, everybody? Welcome to a Sunday edition of Coffee with Crypto. I hope everybody has been having a good weekend. I just thought let me start my morning with a good cup of coffee and let's review what's happening in the crypto world. And today I just wanted to share some conversations that the smart people in the space are having. There's one thing I like about this space is we learn from others. And there's a conversation that Ran Nuna was having on his show with one of, I would say, Wall Street investors. That is Raoul Paul. You'll see him in a clip. It's about a 3-minute clip or so. They're just having a conversation about macroeconomics, where everything is in terms of liquidity, inflation, and things like that, and how Bitcoin fits in this picture. So, without wasting any more time, let me bring you into the Crypto Banter screen where Crypto Man Run is having a conversation with Raul. Let them take it away.
What do you make of this decorrelation of Bitcoin from markets? I think it was around the time Larry was saying what he said, the markets were starting to figure out that the real problem was this excess supply issuance of bonds, and that inflation wasn't going up, but bond yields kept rising. And it was that moment that gold and crypto picked up very quickly, is that the more bond yields go up, the more they started going up. That correlation changed. And that correlation was driven by the fact, I think, that the market knew if bond yields are going to go up like this, the Fed or the government or somebody's going to intervene. So you get closer to the cowbell, the stimulus, somebody's going to do something. So I think that was a really big factor.
When you start talking about stimulus, for those that might not understand this jargon that the financial people or the market use, when they speak of stimulus, all that means is at some stage the Fed, the US Fed, which is the Federal Reserve Bank, might start printing new money. They might just start injecting liquidity, fresh capital into the markets. That's what they mean by the stimulus.
And things started taking off. It's like, okay, if this bond market's going to get out of control, then you need to hide somewhere. And also, the banks had started going down again as well, if you remember. Yes. Same period, I think they started breaking down a bit. Let me see when that date was. I'm sure it's about the same. Yeah, October 16th, like the banks had this little peak and then started dropping like a stone. And so, again, the market's job is to forecast the probability of stimulus or a flight to safety. And Bitcoin always does well out of it. So that's what I think started it off. And I think Larry saying the same thing around the same time that the banks turned around, also adds fuel to the fire. I don't know if there's any economic data out that day, but there was probably something around that as well.
So before Aran comes in there, so he speaks of Larry. The Larry they're speaking about is the CEO of BlackRock, the biggest asset manager in the world. It manages trillions in asset management, and his name is Larry Fink. And he came on Bloomberg on their trading show there, and he said the way things are at this point, he wouldn't be buying government bonds. And to him, at this point, did he say gold? But he said Bitcoin might be a flight to safety. So he said Bitcoin and something else. And well, traditionally gold is flight to safety. But now, I mean, Larry Fink is now classifying Bitcoin in that category as a flight to safety, an asset where you can hedge with when your currency is going to the dogs, when all assets, traditional assets that people would invest in are going to the dogs. Where are you going to run? So you need a flight to safety, which might be Bitcoin at this stage. So yeah, that's big, massively big.
Do you think, I mean, like what's going on? From a macro point of view, what's going on?
What's going on is interest rates are too damn high, and they have to issue ongoing bonds to cover the deficits, but they have to roll the bonds from last 4 years, from 3 years ago, 4 years ago in the pandemic cycle, from 1% interest rate to 5% interest rates, or 5.5%. And the problem is, to do that, you have to issue yet more bonds to pay for that. So we're just getting awash with issuance. And this has been my argument about the Everything Code, is that there is no way governments can issue bonds at 5% interest when you're 100% of GDP in debt, because there's not enough economic growth to cover it. So the central bank has to buy it. And what's happening is, here we are pushing the central bank to buy it. Now, whether Janet's doing that on purpose is like, Jay, you're going to have to take this. But I think there's a game being played, is like, okay, we'll show the stress, we'll create the stress, we need to cut rates, we can roll this debt at lower levels. And if we can find the right excuse, like a recession, we can push it onto the Fed balance sheet.
So he's talking about Janet Yellen and Jerome Powell. I mean, this is Janet is head of treasury in the United States, and Jerome Powell is the head of the Federal Reserve. So they are almost playing this game where they're giving each other, they're passing each other the ball. And at some stage, if this ball drops, they can use this event as reason enough for them to do something drastic on the system, whether that being printing more money or whatever the case might be. But the system is broken, and they can see it. So they're just finding way. They are sellotaping it, as much as they can. I mean, they're gluing it in places just to keep it moving at this point. But at some stage, it will get to a point where there's nothing else that they can do but print more money. And we all know that Bitcoin is an asset that enjoys liquidity. As long as there's money flowing into the system, money will eventually flow into the riskier assets. And it's no longer a risky asset, because Larry Fink said this might be the flight to safety. Larry Fink, BlackRock, and Vanguard, and Grayscale, and other asset managers out there, they are all gunning for the Bitcoin ETF. So at this point, I mean, if they launch this Bitcoin ETF, and it's not BlackRock alone. I mean, there's about almost 10 of these companies that are looking to launch their Bitcoin ETF. I mean, if they just launched 1% of their balance sheet into Bitcoin as a Bitcoin ETF, I mean, there's going to be so much money that will be flowing into Bitcoin, because these asset managers actually have to hold the actual Bitcoin. They actually have to buy the actual Bitcoin. Yes, the people will be buying a representation of Bitcoin from BlackRock or from Grayscale or whatever the asset manager might be. But the asset manager itself needs to hold the Bitcoin on the Bitcoin blockchain. They need to have the physical Bitcoin, even though it's digital, but they need to hold the physical Bitcoin. So these things are massively, massively big, guys. So we're sitting here with these great minds in the space. I mean, I enjoy when Crypto Benta brings this kind of people online. They tend to share a certain picture that you and I generally don't have, or the conversations that we are not exposed to. What the smartest people are seeing out there, the conversations that are hearing, and what they can see when they look at certain movements of money, certain balance sheets, what the smart people are doing with their money. I mean, they've got preview to this information before it hits the open market. So yeah, that's Raoul Paul, a very smart guy with Crypto Benta, and I mean, he's a trailblazer. He's a big man in this space. Yeah, so I like to say to them, no, kudos, thank you, your man again, the crypto connoisseur, back again on this Sunday morning. Guys, enjoy the rest of your day, enjoy your coffee. Yeah, let's keep learning in this space. Peace out.